Good day, everyone, and welcome back to Humble Traders channel. And this channel was initiated to share with you our trading journal using a very unique strategy that we have researched over the years to come up with. And in these times, we know that many are struggling in their trading career, and you may have a working strategy, but seeing one or two things here, they may want to add to what they already have working for them to fine-tune their trading skill. And also to the beginners, this can serve as a fresh start. You can just come here, watch our content, try your best to copy them onto your own charts and see the results you get. I'm going to try to always show what I believe many would want to see when you go to their charts, instead of trying to teach us the terms of trading and going to the very beginning of it all. This is like trying to place us in the market even with zero knowledge, to try to understand the environment, try to navigate it, and then begin to practicalize what we are seeing. Now, considering that we have been using a strategy that involves the use of EMAs and OBV and MFI indicator, I just caught this setup and I said, let me come here and try to show you that this happens on every time frame. In fact, I saw this happening on the monthly time frame, and this pair, I was waiting for it for throughout last year. I don't know what happened, and I just missed the trade. But you can see with this strategy, you will see that look at this bottom here. This bottom here is showing you 1st September 2019, and look at this. By 1st December 2019, there was actually a sharp move. 1st December 2019, a sharp move happened to the upside. In trying to apply this strategy, when you see something like this, you try to wait and see what will happen. Would there be a strong pullback? If there is a strong pullback, the next thing you wait for is to see if there will be EMA crossing. If there will be EMA crossing. When the EMAs cross, although you know I told you this one is the monthly time frame, as you can see on the charts. So this requires a lot of waiting, as each candle here represents 1 month's trading. But if you are a position trader, you know the wait that is involved, and you are ready to do it. The strategy we are using is called study, investigate, wait, attack, and that is SIWA. When you are using the SIWA strategy, you need to make sure all things align with your study parameters, with your setup parameters, so that you prepare and then you just attack and enter the market. So by the time the pullback happened, we saw this pullback quite okay, but are we going to enter? No, we still wait to see if there will be a crossing of the EMAs. So you can see where we had the first crossing of the EMAs, where the blue one crossed the red one. The blue one is our 9-period EMA, and the red one is the 21-period EMA. The moment they crossed, price started showing sign of going back up to even pass that initial pullback. So if you had seen this, the next thing you do, you open your trade as a position trader. But you are ready to wait for years even for this trade to keep playing out. And with this pair is very much a trending pair. So you can open it, and if it faces this particular direction, it keeps going on and on and on and on. So if there is a downtrend coming in, you join it, then you are just going to be in that trade for a long time. The same thing applies to if you are catching a bullish trade, that is if the trade is poised to go higher. So the moment you join this trade here, the thing is, you just close your chart and go away. That's for a position trader. This trade, look at what it did even when you went away. Look at it right from this area where I place the crosshair. Then keep looking to your right, and I will just continue shifting the screen. Look how it placed you in so much money. Look how it placed you in so much money. And the major pullback, the most recent one came in June, in July of this year. So you can see right from 2020, you held this position for 4 years and you have been eating from it. If it's a big capital you have in there, the only thing you need to do, even if you want to eat out of it, you just go and withdraw some amount of money. How much pips? I measured and I saw about 7,000 pips. About 7,000 pips in 4 years. So this is something, and I don't think the trend is over, because if you look at the way price has closely followed this EMA, it just clung to this our latest EMA, meaning there is a strong uptrend in place. The lightest EMA is the blue one, and each time it retraces, it hardly even breaks the EMA that is the lightest one until it came here, and then a few other places here and there. And if you ask me, the trend is not even over yet. Since I'm practicing this, I'm using this strategy, and I want to join this trade, and I see that we are in this month of October, and there was this sharp pull back in July. The pullback happened in July. The whole month of July was in pullback. Even in August, look at it. Then September also tried to continue the downward trend but pulled back up. And then this most recent candle is now showing a movement back up, like the upper trend, the uptrend is resuming. The next thing I do when I see this, as someone who wants to join this trade, is to either join it the moment I see price close above this. Even as a position trader, I will just follow it when I see price open, go back up in this manner. But since I'm not a position trader, I like to take analyze my trades from the higher time frames to the lower time frames. Though I'm considering starting a position trading account, but I haven't yet. So, but how do I join this trade? I will just try to go down to the lower time frame. Let's go down to the weekly time frame, and then we'll see what happens. See that same pullback. The pullback is where I begin to get interested. I will just see what happens after the pullback ends. Price just try to go back up, and then the EMAs begin to align as if they want to cross. I think there is already a cross. No, they have met. Look at this sharp meeting of the EMAs between the 9 and the 21 EMA. Those are the first ones that have tried to cross, since they are the lightest ones. They are the lighter ones. So once they cross, the next thing I begin to look at is, did price close above them? Here I got it here, and that means throughout the month of September, I think it was on 29th of September, price traded up and above the EMAs and then closed above them. I will just open my trade here if I am trading the weekly chart. If not, that's how you would keep building your narrative. At least now we've seen the monthly chart, we've seen that there is a strong uptrend in play since 2020, and we drop down to the weekly and we've seen that sharp pullback. That is the most recent pullback. But we don't want to trade this weekly chart. We just go down to the daily chart and still see what we can have there. And you can see on the daily chart, if you ask me, there is a clearer view of what has been happening. look at it, price has already positioned properly. I'm trying to avoid mentioning some things that are not involved in this strategy so that I don't end up confusing my viewers. But if you look at it, if you look at only the EMAs, look how they crossed here. EMS crossed back up here, because when we say EMA crossing, you know, when the lighter EMA is above and the heavier one below, that is a perfect uptrend situation, because the heavier one is going to carry the lighter one, meaning that we are going up. But by the time you see a crossing where the heavier one is pressing down the lighter EMA, then you know, no, price is now going downwards. So but now what we have is that the lighter EMA is above the heavier one. It means there is the uptrend is about to continue. So the moment I see this, I just say, okay, another confirmation again. See how we are doing the multi-time frame analysis. This is how we go until we go to our until we reach our time frame of entry, which is the 4-hourly time frame. If you notice, you have not been seeing these pop-ups on the screen. I'm just using my mobile phone where you have a lot of groups in play. So but if I should switch on the data right now, you are going to see pop-ups on the screen. But I want to attempt to drop to the time frame of entry so that I will show how we take the trade. And I think at this point, let me just switch on the data so I can view the charts and then maybe switch it back off. Right there, you see them popping on. I don't know. I will try and make these videos with little interruptions very soon. So, but dropping to the just manage the text for now. Let me quickly switch the data back off. Now, look at the screen. This is our time frame of entry, and price at this point, you can see how it moved down, it pulled back down past the 40 EMA. Even the green EMA there is the 40 EMA. I only added it recently to at least give more context to the support and resistance, as the case may be, depending on whether you are buying or selling. Sometimes you see that it gives you more confirmation on taking your entry. So you can see the moment price came down here and it attempted to go back up, it dropped again. All right, so what we do now, we're not going to take this trade immediately. We only wait to see a crossing back above. So we want to see, look at the way the EMAs are now crossing. They are crossing downwards now. Like I said before, look at how the heavier EMA is pressing down the lighter ones. It means price is in a downtrend. So even though we have a mature uptrend in place, but you can see that on this time frame, price is still in a downward move. So we only wait for it to show us sign as if it is ready to go back up. What are the signs we look for? We look for, number one, we wait for a fresh crossing to happen where we have the lightest EMA above the heavier ones. And then we also take note of the candlestick formation, and we hope to see at least like a hammer or a bullish engulfing candle. And the moment we see that, and we see that the price closes above the lighter EMA, like the 9 EMA or even the 21 EMA, we just pull the trigger, which is the last A in SIWA: study, investigate, wait, attack. And the attacking is where we take the trade. And the moment we take that trade, we have joined this trend. So only wait to see what happens between um, our time of entry up until our conditions are violated, or we see another attempt of price in trying to change direction. Now, I have analyzed this trade in hindsight, but I'm also taking some trades, live trades, as I'm making the videos, because I just want to keep everything real. Like I said in my introductory video, no hidings. If we fail, we are going to show it. If we win, we are going to show it. But the surprising thing about this strategy is that since we started, and the moment you observe all the disciplines that are recommended by the strategy, you follow them well, you hardly fail. And there is no perfect strategy, but so far we've been back testing, forward testing the strategy by being in live trade situations and also in memo accounts. In that memo account where we even take big lot sizes, in that demo account, sorry, did I say memo? Excuse me. So in that demo account where we take even larger lot sizes, this strategy failed only once due to the crude kind of stop loss placement we did. We did not calculate our stop loss based on maybe the ATR factor. So you can just maybe go through this video, you can rewind it, watch it again, so that you can catch at least the basics of this strategy and begin to apply them. And we also, I'm going to show you the trades that are going on in the demo account and that of the real account. And like we said before, we took our real account from $2 to $9 in 1 week using this same strategy. So if you ask me, it's good. And in the demo account, we are now above $2,000 in profit. I don't think this strategy is something that we can call poor. It's a good strategy which has up to 80% win rate. In fact, according to my generative AI, it said it has over 90% accuracy. So thank you very much. You can stay tuned for when I make the next video on the Bitcoin trade that we have been following since yesterday. Thank you very much.